I want to show you this clip just to show you where we stand in relative terms in scalping the extreme. The bold red lines are the central pivot, and I want you to see how, look how price is price action can be quite choppy and quite volatile. When you think about it, I mean, there is just this candlestick alone as an example. This candlestick alone goes from a low of 82 to a high of 40. That's about a 60 pip range. Okay. Now, if we're already above the central pivot and price is spiking up away from it, look at the central pivot like this, as though you're taking an elastic band and you're stretching it out, and eventually it's going to come back and maybe stretch out again and come back, or even move to the other side and stretch out and come back. Okay? So even among this choppy, volatile price action, just look for the extremes of the ranges that it's in, or the extreme movement away from the central pivot, and look to buy in the buy zone and sell in the sell zone. Again, look at the next day. Price moves away. Even look at, as price moved away on this spike, the high of this candle was 95.61 and the low of the next candle was 13. So there are a lot of pips available. Even this one here, the high of this candle was 78 and the low of the next candle was 37. And again, so when we for example, when we enter into a new day of trading and we're already above the central pivot in the sell zone, look for spikes to sell. Even this spike right here, let's have a look. This tiny little spike, a high of 87, to a low of 62. Just this little candlestick right here went from 62 to 87. Yeah? And try to trade this volatility. Of course, these rallies are more the exception than the rule, except in a very aggressively trending market. But look at when we get into ranges. Look how sloppy and choppy this is. When the market is sloppy and choppy like this, you gotta wait for the market to come out to the extreme to trade it. So, for example, look at the rough level of resistance in and around this area right here. Okay, just as price moves down, look for buying opportunities in and around these extremes. And we move into the next day, price moves out to an extreme. Even as it comes out to this extreme, you could have bought anywhere in here and made profit, with the exception of this candle here. Yeah? Now, look at price here, central pivot, price moves out. You could have bought anywhere along here, with the exception of this one would have stopped you out, but any of these you could have bought and it would have paid. Okay? We move into the next day of trading, and price moves away from the central pivot, not that far in this case, but it moves to support, becomes resistance, and then moves back to the central pivot. Comes down to support and then moves back. Even this candlestick alone, from that low of 09 to the high of this next candle, is 31. Look, just that little candle there to that one there, to this candle, we had 22 pips. Just that little bounce right there. So we need to look for these little characteristics to trade, because the market, even when the market is sloppy like this, you can make trades. Just wait for the market to come out away from the central pivot. The farther the better. And also, the faster the candle moves, the more tensile the elasticity, the more likelihood you're going to get some response back in toward the central pivot. Very important.